Anthony Morrow, run a company called American Eagle Gold. We're on a pathway for multi-billion ton deposit forward-looking statements in British Columbia that you can drive a golf cart on. We got nearly $40 million in the bank, and our plan is to drill, and drill.
That sounds like a Trump quote to me. Let's get the politics out of this. Welcome to London.
Yeah, thanks.
What are you here to do?
Here to meet investors. We meet with a lot of institutional investors, meet with companies, just spreading the word.
Right.
The big thing that we found out when we went to Vancouver is, despite us being almost a 30x from 2 years ago today, still nobody had heard of us. So I think just to get the stock up, you got to have more people to know about you when you put out the results.
The trouble is, there's a lot of companies out there, spouting out the same sort of stuff as you, but now you've got a point of differentiation. You've got South32, you've got tech, and you've got a ton of cash.
Cash is king. The holy grail for us. When we did our last, normal fundraiser in January 2022, we did a deal. There were warrants on it, and we got coupon clipped, and our stock went down. And Steven Stewart is our chairman and friend. We made a goal, and let's not do warrants again. Let's do shareholder-friendly deals.
Yeah.
And we brought tech in because I think a lot of times people want someone else to do the homework for them. There's a lot of companies out there. There's a lot of people like me saying, we got the best deposit, but how do you know what's what? A lot of people are pigeonholed.
Yeah.
But tech coming in kind of showed that, it gave us credibility. And they're no dummies. They had Afton, Voisey's Bay, Hemlo, a lot of discoveries. And I think that kind of put us on the map. We obviously had great drills, which you need. But, we needed another, major to come in to kind of remind people that we do have credibility. And our holy grail, what we focused on, Steve and I, was find that second major that came in on equity. To have two majors on the registry, there's not many companies like that.
Yeah, and how much do they hold between them now? Or will they hold?
About 36% of the company.
Right, okay. So there's the chunk. I think with tech, it's a case of companies like that, they're kind of mid-tier seniors, they deploy capital in lots of different places, want so much data. So can you sort of explain what they came in off the back of and what's happened since then to allow sort of South32 to make a decision?
What tech came in on the back of?
Yeah. So I'm going back a bit.
Yeah. Tech came in. I think we're a low enough valuation. They're willing to take a punt as for investment purposes. Obviously, access to your data room. The idea I think is to eventually take us out someday.
Yeah.
But we're low enough valuation that they're able to take the punt. It was an investment for them. And guess what? They 10x their money since then.
But that's not the game they're playing.
That's not the game they're playing, but they're kind of hands off a bit. South32 is more aggressive. They happen to be at site doing the site visit when we're bringing the core from the north out of the ground.
Right. So that's the copper focus.
It's the north zone. There's more north than we've ever drilled.
Yeah.
And they saw this core out of the ground. And Charlie Gregg, who was part of GT Gold, he drove 10 hours to go see it. And then South32 was already there. And things are kind of on like Donkey Kong after that. And I think, from their investments probably a little bit different than tech. I think they kind of really saw the light at the end of the tunnel. And I think they want to get in. So listen, ingratiate themselves with us.
Yeah.
And they really have a focus of expanding copper and being in North America, especially with what just happened with Aldebaran. Is that how you say it?
Aldebaran.
Aldebaran.
Yeah.
So they came in and they decided to do an investment just on visuals.
Yeah.
And I think for them, I'm not going to speak for them, but if these visuals come out the way I think they're going to come out, if they're post visuals, then I think they'd be in line with everyone else. But we had $8 million in the bank. I think if we came out with our next results, I think the market would realize we needed to have a lot more money. So we'd have a little bit of a ceiling. And again, we don't know what the results are going to be. We've been in blackout since we got the term sheet, and they're willing to take a punt. And I think that's why it's good for us is now we have 3+ years of funding behind us. And also, I think it shows investors, if these guys are going to make a $29 million investment in you on visuals, why don't you put $100,000, $200,000 in you? And then all of a sudden now, all the investors, a lot more investors around the world know about us. And I said this before, I was getting calls when South32, the news dropped, from funds in Australia, funds from Europe that I never heard about before. And for us, it's just about, it's like a tree falling in the forest. We just want people to know who we are. So that's kind of our goal there.
Yeah, and I think that's why I asked you to go back and look at the tech stuff. I think if one, mid-tier senior comes into a company, it's just a punt, it's pocket change. It means nothing, but it's just placing some bets, right? But I'm paying attention. because someone has validated the fact that there might be something. I think the South32 signals something much more serious because the work you've done since, and two, to do it off the back of visuals is quite extraordinary. They most people don't see visible anything with drill core, right?
$29 million investment on equity with no ROFR.
Yeah.
It's significant, and it completely de-risked ourselves. And now we can drill everything we want. Like still, like, when you're kind of bootstrapped a bit, even last year, it's like, how far do we go and drill and take those risks? Obviously, a guy like Tom Woolrich will be like, we need bigger step outs, but it's easy for guys like Tom to spend our money for us. So I always say it's like drilling a hole that's 1,000 meters deep. It's like driving a Lamborghini off the edge of the forest. Yeah. But now that we have the $40 million in the bank, we now have the ability to do these big, expensive step outs. Yeah. Because now the deal for me is like, how do we value all that area that we haven't drilled before we get to the area that we're going to be eventually bought out? Now it's kind of like a rush against time to actually drill everything. So like my focus has completely changed.
Right. So this is a bit that I wanted to get to, but we need to kind of set it up to how you've got here, because big, expensive, but big, efficient use of capital is really important for you. So, and some people get a bit, crazy when they get a bunch of money, right? So, explain the thinking behind what you're going to do with the capital, or if you've not got there, what's the process that you're going to go through?
We have a runway.
Yeah.
We have 3 years of drilling, so we could probably drill about 100,000 meters with that.
Okay.
But like investors, like we want 5-6 rigs. We'll probably do 3 rigs, 25 to 30,000 meters. Maybe do a winter program. But the thing is, like, we tripled in value when we didn't drill from January until June on marketing, getting the word out. Mm-hmm. I think our money is better spent doing marketing during the off season. Mm-hmm. Also bring in some, the Richard Siltos, the Alan Wilson, the Steve Garwins of the world to have a look at it. Because like, how does this compare to other deposits? And doing a proper model, and then when you actually drill those holes, you make sure you put it in the very best place possible at the cheapest drilling rate possible. Because a hole right now in the winter, like we can get 2 holes like that this summer. Yeah. So it's all about cost of capital, and now we don't have the pressure to do the winter drilling to get our stock up to do a raise, because we don't have to do a raise anymore.
Okay, explain that to people, because I think there's lots of people kind of coming into this space. They're interested in copper, obviously very interested in gold at the moment. And if you can start mining Bitcoin, that'd be even better. But for now, is that balance between what South32 want you to be doing and what that relationship looks like in terms of making the modeling and the planning, the targeting, etc., and what the market expectation of you has been, and maybe what it should be going forward. You're not drilling for headlines anymore. You need to start building the picture out.
We're not drilling for headlines, but the more time we spend to properly model, the more headlines we're eventually going to get. It's inevitable. But we're less in a rush to do drilling right away. I think the thought process before South32 came in is like, let's do winter drilling. We know where we want to drill. We can get the stock up and do a raise. I think it's kind of changed a bit now. But South32, like, they want to be super active. Like Tech's a little bit more laissez-faire. They're great, but they have like maybe a different mandate. But South32 wants us to help us, give us resources, help us figure out where those holes are going to be. And like, they probably had 10 or 20 people that went through our data room, looked at everything. So when we're doing this deal, I kind of felt a bit like, we're selling a house where we know there's a Picasso up in the attic. But I think we're all in the same place here. I think they want us to make a discovery, and like companies like that, I worked at IM Gold for a while. They'd rather buy you for $1 billion than for $100 million, you being de-risked, because their bottleneck right now with these gold companies, these copper companies, isn't cash, it's people. Yeah. So they want to make sure if they're putting their people towards it, they want to make sure that it's de-risked. So we're gonna be guns a-blazing.
Yeah, I mean, discovery's work is essential for the big boys as well as the little boys, right? So, so where are you with that? What you kind of got this kind of halo. What would you call it?
I call it, me and Steve called it the blue sky donut.
Why?
Well, there's a lot of blue sky. First of all, like if you look at it, we've only drilled about 20% of it. And we started this little small area, and we've kind of pressed from maybe 3% of the area. We built up to 20%. And with this drilling that we've seen, going southeast and going northeast, it's all kind of extending that way. Yeah. And a guy named Jeff Stibbert, he runs JDS, one of the smartest guys in mining. Yeah. He brought me to his office, and he showed me a mine. He goes, this giant mine. He goes, you have the same thing. He goes, but they have a piece of paper, and they got these, they think it's a giant open pit, but there's 7 different 100 million ton high grade deposits on it. Yeah. Because you guys got the same thing, but instead of it just being like a square, he goes, it's a circle.
Right.
You just haven't drilled enough of it. He goes, you could have these 7, 8 high grade, 100 million ton kind of areas there, and you just have to drill it. So I think that's the big difference. We just haven't drilled it yet.
And what are you trying to see? Because we've kind of got this sort of the kind of copper in the north coming down, and gold in the south. And you report in copper equivalent terms, but how's it sort of breaking down with the data that you've got so far?
In the south, I think it's about, I would say 50-50, maybe 60-40 copper to gold. We call it the golden rich zone.
Yeah.
And in the north, I would say it's probably around 70-30 copper to gold.
Okay.
But we're getting hints of gold with some of these drill holes that we're having. So
it's kind of working for gold companies, clearly, and possibly people hunting copper specifically.
Gold companies want copper now. Look at Barrick. Like Nico just did that big investment with ATEX, with a warrant, by the way.
Yeah.
So yeah, like these companies are diversifying.
It's not competition.
It's not a competition, but is it? We're fighting for shareholders.
It is. Okay, so you're getting a sense of what it could be with this kind of blue sky donut. So with the drilling going forward, you can afford to wait to drill when it's cheaper, 2 holes instead of 1. In terms of this, don't worry about the winter thing, which is great. What is the season? How long's the season?
You can drill all the way through the year. I think the season you really want, where you want to avoid is the breakup of when it starts getting wet. So maybe April, May, beginning of June.
Right.
But you can drill all the way through the year. We still might drill in the winter, but we're just evaluating everything. We still have 11 assays coming out, so it's hard to know without having our assays out yet what we're going to do.
Okay. Now you're not cash constrained like you were 2 years ago, I'd say. You didn't have as much money as you want. Ideally, you want to have lots of money. So I know Stephen's very good at finding money. I better say that because he'll be watching. But you know what I mean? It was tight, and I think the market was tight with the money that you've got looking forward. Do you think you focus on this single asset because there's enough targets for you to get after? Are you worried about diversification and all that sort of thing?
Well, first of all, we did that deal with South 32. They gave us the money to drill on NAC.
Okay,
all
so
of our
that's very
investors,
specific.
We got to 80 cents because people like NAC. The moment you start diversifying, getting other things,
because you came from that, right? You came from another asset.
Yeah, when you fail fast. We dropped gold in Nevada. We focused on NAC. My uncle helped to find it, but the moment you start going to something else, people are like, "Do you have something at NAC?" Like even when we did the gold equivalents, people thought, "Well, do they have copper more?" Now they're announcing gold, but we did that because gold was strong, which we learned about. But the focus is 100% NAC. I think we got a tiger by the tail here. People are going to find out soon enough, and our share price has done well.
Right. Okay. So let's talk about some of the other sections going on in the marketplace. Like, do you think are drills readily available? Are there people readily available? And any kind of red flags in terms of the operational side of things?
If we're like in the Arctic, maybe maybe people wouldn't want to work there. But like we have a pretty strong team. We're keeping them working over the off season. And look, Neil Proust, Charlie Gregg, that runner exploration, people want to work with them. Charlie already made a discovery. You make a discovery as like a young geo, you kind of make your name forever. You never have a problem getting a job again. So we're not worried about the people. And in terms of the location, like I say this and maybe get made fun of, but like my proxy, if you're in a good location, is if you're within an hour and a half drive of a city with a sushi restaurant and a brewery. We've got 2 sushi restaurants, 2 breweries. So when it comes down to CapEx, this is why Tech and South 32 are interested. Like if you look at Galore Creek, the cost to build our mine is going to be less than half what it costs for Galore Creek. We're not next to a glacier. So we got no people constraints. We got no location constraints. And in terms of the drillers, we've used the same drilling company for the last 3 years, ITL, shout out. We like working with them, and we're pretty loyal to the people we work with. We've had the same team from the very beginning. We use the same drillers from the very beginning. Not to say we're not going to go to tender, but no issues with the drilling.
Okay, and let's look at timing, because when we sort of interview people after they've made lots and lots of money, way down, and they look back at projects, they say, timing was a big part of it, luck was a big part of it. For you guys hitting the gold market at a time like this, as a junior explorer, as a copper explorer, how do you kind of view the market at the moment? Because it kind of seems come off a bit in the last 7 days.
Yeah.
Maybe Trump related, maybe other factors, but maybe Bitcoin. Who the heck knows, right? I see all sorts of excuses for all sorts of companies out there, but how are you viewing how you have timed this market? Do you think it's a good time?
I think our timing when we did the deal was amazing. We did it on the Friday before, the Monday when everything
Yeah.
tanked right after the election.
That was good timing.
But, I think like having good results, it's almost like alcohol and tobacco. You're a little bit inelastic to what the, small term macro is. I think people want good results. And I think investors realize that when this becomes a mine in, 5 and 10 years forward-looking statement, the copper price and gold price is going to be a lot different. So I think these majors are getting hit a lot more, and I think the juniors are kind of getting dragged a bit down with them.
Okay. I mean, I think your strategy of like going and trying to get like industry partners on board quickly protects you from the kind of momentum and sentiment play, which a lot of juniors rely on. So it's fundamentals driven for you guys. Can you sort of talk to what are you saying to your retail guys at the moment? So in terms of hang in there, don't cash out, or are you happy to kind of rotate that register?
We just give them all the facts. I think we're really good with our investors because, we do interviews with retail like Nate Smith. And we introduce online, all of our marketing is kind of homegrown online with like Charlie Gregg and Neil Pro. So I do the high level kind of pitch, but we get all the geos together and then they speak to the other geos. We just tell the retail, look, we've brought you up 30x in the last 2 years.
Yeah.
Give us a little bit of leash here because we have never disappointed on the asset level and we always have surprises on the corporate level. We brought in tech, we've brought in South 32. So for me, it's like, I think we have the potential to have another 10x on us. Like
Okay,
my goal, it's good to have goals. My goal is triple comp. I always say that. It's get to $1 billion valuation, then reevaluate. And this South 32 money for us, it creates kind of a bit of a floor for us around that 87.5 cent level, at least for now.
Yeah, but shareholders don't look at it like, let's get to $1 billion level. They look at what the share price does, right? That's how we make money. And it's 30 times since, I think, literally this time 2 years ago.
Yeah.
It's 4 times since the beginning of this year. Most people are thinking, is it going to get better than this? Do I bail out and get on something else? You're saying, but we've got the potential to do more. The less money will free up the ability to show more.
The attrition you get from the retail investors who are like, look, if you make a profit, I don't blame you for selling. Like one of my mentors, Peter Brown, founded Canaccord, and he always said, don't worry about the reason why people are selling. He goes, someone might have died. Someone might want to build a pool. You can't fault people for taking out a 5x investment. He goes, focus on the people buying. And the thing is, for any retail that comes out, the more we de-risk ourselves and the higher valuation we get, now these banks and these funds can start coming in. So they'll start gobbling up any kind of retail that's doing penny flipping. And we've seen that recently. I saw a lot of funds come in.
Okay.
When we saw the jump come in from we went from 40 cents in September and now we're trading 85 because I've started to see these funds come in. So they're buying anyone that's kind of taking profits off the table, which I don't blame them for.
Okay, and what's that register look like now, do you think, in terms of balancing?
36% owned by Tech and South 32, another 20% owned by insiders, Steven Stewart, OrCap, etc. So about 60 to 63% is tightly held, not going to be sold.
Mm-hmm.
So you got about 37% float.
Is that good?
I think it's great.
Okay.
What do you think?
I think it can work. I've seen it, but I've also seen paralyzed companies. Do you know what I mean? So I think, especially if you're not going to raise any money anytime soon, you're going to need that kind of liquidity. And there's no liquidity event, so where's that come from?
Well, 37% times 130 million is still, 50 million shares is enough liquidity around.
Yeah.
Traded 2 million shares last Friday with no news, so there's enough liquidity. Sometimes there's no liquidity, it goes up even further, and then you get into a spot where
it went up off the back of how much trading?
About 2 million shares, it went up about 16%.
Okay.
I think what happened, I think there was a short that came in on October 30th around 76 cents, and when we kind of got past the 76 cent level, it was a bit of a squeeze.
So a little bit of a few tears.
I tell people, this is not the company to short. I always warn people that we will shake you out.
Yeah. Well, it's interesting. Actually, I was talking about that with another CEO this morning, and the conversation at government level. So, like, if you want kind of critical minerals like the coppers of this world, you're going to need to support us, and you're going to need to be looking at some of these banks that you're working with, and have those conversations about no more shorting around critical minerals. But we'll see if that actually comes to bear.
It's an efficient market. I think. Look, some people hate shorting, but I don't think it's the worst thing in the world. If you got good news, the shorting will actually help you out because people have to cover their shorts. If you don't have good news, what are you even around for anyway? So I think it's kind of a bit of a give and take. I think obviously people that their stock price is down, they want to point at the shorts, but it's an efficient market.
Yeah, I'm not a fan. Never done it. Don't like it.
I've never shorted. I don't think most retailers can.
But I think there's a lot of people in banking who say it's just part of the machine, so don't worry about it. But I do struggle with that?
I just try and deal with stuff I can handle. That's a black box I never figured out, and it's not something I'm kind of focusing on. Like start doing petitions against shorting. I try and just focus on getting shareholders, give them information that they can buy the stock off. Like all these resource companies, it's like finding a needle in a haystack. My job as CEO is to make that haystack as small as possible, give people information, and just reduce the risk of these investments.
Yeah. Look, I think the gold side of your story, there's a lot of competition out there. There's a lot of gold companies, 50% market.
You said there's no
companies,
competition.
Right? Hey,
You said there's no competition.
when?
We were talking about ATEX.
It's not a competition.
Okay.
There's competition, but I think you're saying we did it without warrants and they did. So you're better than them, right?
They're a great company.
They're a great company. Ben's a lovely guy, and
Ben.
they've done like you've done really well. I think there's a lot of gold stories around there. So in that sense, there's a lot of competition, a lot of white noise about gold, right? Copper, not so much. But I'm looking around at your peers talking about gold, and certainly on the TSX, TSX.V. Not a lot of companies, not a lot of good companies. It's talk about short supply. That's clearly in your favor, but it's quite a kind of niche space at the moment. Is that what
Yeah, like find me a copper play that has a pathway to multi-billion ton deposit that's in a safe jurisdiction with road access. That's not up in the Andes or in the Arctic. There's not with two majors on your registry.
Yeah, it's kind of interesting. It's very interesting. Come back to that sort of timing and luck and all the rest of it. But I'd probably go with this like 5 companies I point to, and there's quite a few I would point you away from in the copper space. So that's got to be kind of good news in terms of pricing. It's come off a bit, I think, back down to $4 again. Unbelievable.
$4. Where's it going to be in 5 years?
Well, I know where it was 5 months ago. It was at $5. So it's kind of finding its feet, as it were. But if the supply demand fundamental is kind of, it's a bit obvious.
It's got to go up.
Yeah. Okay. Well, I think people looking at copper projects, something that they should be looking at as your company. I kind of quite like that, and a rather large gold kicker as well. Not bad in a market like this.
It's a good place to be. You want to diversify.
Good to see you, man.
Thanks, man.
Enjoy yourself.
Cheers.